Hello, and welcome to another update video about AGIX. AGIX is currently still in this ongoing decline, and we should be targeting the 95.5 cent level next. This is the 23.6 Fibonacci retracement of the overall support area there for wave 4. You see, the chart obviously topped probably in the third wave. That's the idea. The yellow count, and it could be a wave 5, but that's only the alternative. So in the third wave, therefore the assumption is we're now in a fourth wave. The fourth wave should reach this support zone. There is an ideal target for a fourth wave. Generally, just generally when we talk about fourth waves, it's typically the 38.2 fib level at 73.4 cents. We don't need to get there, however. So the idea is, in the preferred scenario, that the price dipped into the A wave here on the 19th of March, formed a low, rallied in a B wave, in an ABC structure. You see this is a 3-wave move up. And we currently see this decline, which I label as a C wave. So we have this ABC structure. The C wave should reach, as I said, the 23.6 fib level or lower. And if we measure the internal targets of that wave 4, then the C wave gives us a target of, we can measure actually, and it gives us a target of the 90 cent level. So while 95.5 seems to be the next support and the next target, the 90 cent level is the relevant target for the internal structure. And I mean, it could go lower, but the 90 cent level is definitely a level to watch. I would keep my eye on the I would at least keep an eye on the 90 cent level, which is a common target because the C wave often reaches the same length of the A wave. Can be lower, yes. And then the next substantial one below that would be 73.4 cents. I mean, we can add the additional fib levels, which are relevant for a C wave, which are here 80.2 cents and 74.8. But I'd argue that the 90 cent level is the most relevant one. And then below that is 73.4. So that's what I'm watching. Either way, there's currently no evidence of a low in place. And it minimally would take a break above the swing high here that formed today at $1.11, $1.12 to suggest that a low is in place, minimally. Okay, that would be wave 4. It is also possible that some kind of a triangle forms here, but it's a bit too early to really talk about that. Triangles are 5-wave movements, and they are characterized by a corrective move down. Yeah, we've got that. Corrective move up. We've got that. This move down would need to be a corrective move, and then another corrective move up, and then another corrective move down, so that we eventually get this sort of structure of a contracting triangle, which, again, we don't have evidence for. And triangles have become extremely rare in the crypto space. Most corrections turn into more complex patterns. When they look like a triangle, they typically don't form triangles eventually. So yeah, that's all good. And then obviously the lowest support in the region is at 59.2 cents. That's really the lowest one. I don't expect the price to get there at the moment. And yeah, that's the idea. And then a fifth wave to the upside should still take the price to $3. We can specify that target further once the wave 4 has formed a low. And that's sort of the idea at the moment. I mean, I think it's worth keeping an eye on that 95.5 and then 90 cent levels. And for a potential, rally. I mean, on the Bitcoin chart, I'm also looking for potentially just one more low. And that could very much go together here with the AGIX chart. And then, okay, maybe it's gonna do another fake out and then come back into support. We can deal with that then. But I'm watching for the potential of a reaction to this support area again in the short term. That's my update about AGIX. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.